The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And today, the 17th of August, we're looking at a Dow that was down 135 points early on. But it happens to be up 33 right now at 17,510. S&P is up 475 at 2,096. Comp index is up 18 at 5,066. VIX index, which is up sharply, up in the 14s, is now at the 13.25 level, up 42 cents. And pulling back, the most importantly, you've got the E-minis, which were down very sharply, are now up 275. This is the E-mini right here. This is the daily right there. Bumping up against this trend line. See this dash trend line there? So the E-mini needs to get to 2096.75. It's at 2092 right now to really pierce that downtrend line significantly. And you can see you've got a different one in the 120-minute chart is at 2093.50, and it closed in the 2093.70s, starts to break that trend line and turn it into support rather than resistance. All right, let's get this out the way. Let's move this 120-minute chart right there. Let's go to the Dow. I get all the numbers. Dow is in leg, let me just see this. This should be very interesting. 9103.92. So this is leg C. In a 120-minute chart, leg 81.92, leg A, gray A, in the daily chart at 17,509, 17,661 is the 200-period exponential moving average. Resistance, and we'll see if this week it's able to get there. We're looking at the weekly chart, so we're in a sell mode in the daily. We've gone from a sell signal to a sell mode in the weekly. This is a rebound because it almost touched in the structure of the 17,034 level that we were looking at. There are a number of lows that we're looking at. It's a 17,037, 17,037 low of the 6th of February. And that whole series of lows in the 17,067 to 17,030s area, that is what we were testing. And on Thursday, was that Thursday? No, sorry, that's Friday, Thursday, Wednesday. On Wednesday, went all the way down to 17,125. So this arch formation says we've broken the up channel support. We've gone to the next level of left side, right side horizontal support, and that takes us to a lower low sometime the last week of August, not this week, but the following week. Something should happen. We should turn around. That's the way it looks like. But we have held this pink dash Chapman wave inside wedge support level. The MACD is very poor. The stochastic's at least attempting to rally at 21%. So we can see a move towards the 17,600s. That's what I'm expecting this week. That's one of the reasons why, for my subscribers, we went long the 300% long of a small position of the Dow, but we just got stopped out. Unfortunately, I really wanted it because I wanted to actually play this as a counter trend move. I didn't want to buy stocks. I wanted to buy the ETF. It was a much easier thing to do. Tough. That's the way it goes. I could have made the stop much wider. I just didn't want to do a tiny little stop position. We'll see if we can. I can always get back in. We'll see what happens. Meantime, back at the ranch, as I say, 17,600s are the target for the Dow, at least short term, with tremendous support. What was today's low? Today's low, 17,341. It's a little deeper than I expected. I expected 17,370s to be where we stopped. We went lower. Meantime, I suspect that low will not be tested in the next couple of days until either late in the next week or late this week or the next week. Meantime, this is a nice counter trend move. S&P, SPX.X. What we have here The S&P is up 6 now at 2097.55. Oh, it's done exactly what we were talking about when I sat in for Tom's show just a moment ago. Yes, very nice leg B in the daily, and testing this downtrend support. Sorry, this downtrend resistance. We want to make it support at 2097. If this can go to if we can go to 2100 today, that's going to suggest strongly that the mid-2090s in the S&P is going to be strong support short term. Now, the weekly charts have a high level consolidation. It has not, unlike the Dow, given a very good confirmation of a sell mode. This is a sell signal which suggests a sell mode on the technicals, but the price is actually held well, and the monthly chart has held the 9-period moving average. Very important what happens this week. So that's that. Gave you the parameters to look for the QQQ series. A nice move to the upside at 111.08, up 57 cents. It really needs to break the high of Thursday, which is at 111.16. I suspect it will, to start leg B. I call it a gray B because it's underneath the previous high. And the weekly chart has had a high-level consolidation. The 120-minute chart is about to make a leg B, but we'll have to wait. Okay, so support is at 110 to 109.70, but the upside has resistance, and that would be the target. 111.97 is the downtrend resistance line. Here we go. I'm going to go to the IWM. IWM right now also coming off a low that was made at trough E, and that was in the 118 area. 122.36 is very strong resistance. It could try to get there. That's kind of high up, but it could try to get there. It's at 120.97, up 61. You've got the New York Stock Exchange, NYA.X, and that is just a lousy chart. It just is not a good-looking chart. The monthly chart, it's okay. It's holding sideways, but the weekly chart, the technicals are very poor. At 10,790, up 788. I think, yes, it could hit 10,853, the 9-period moving average. Maybe go a tad higher, but it's going to be difficult. Then I looked at the IYT. I'll just do that again. IYT at this point now is up 32 cents. Nice move. I got that arch formation that I think is going to happen. And the weekly chart just suggests that we've got a couple of arches to come. This is the first arch. It might have another one. We'll see. I don't think this is a brand new buy signal in the weekly chart, but the technicals are going to determine, because the weekly chart on Friday, exactly what could be the scenario for September. And TLT was up sharply. It's up at 124.61, up 65 cents, holding very nicely. The weekly chart is suggesting that the 122 level will be very strong support as money flows out of stocks and into bonds. At least this is what I'm looking at. And so the parameters are 122 is a support level, 122.5 to 122, strong support level on the weekly chart. You've got the upside 125.71, and if it takes out 125.71 in the next 2 days, I don't think it's going to be quite in the next 2 days, but I think it will take it out. That'll be very positive for the weekly chart, certainly. Crude oil right now, it was down earlier. It's now down, trying to turn around. It's down 25 cents at 42.25. I think oil is going to try to make a little turn here, a little bounce to the 43, 44 area at 42.25. That's what I think. And if it does that, all of a sudden that weekly chart is going to see a candle that is quite good. I'm looking at the dollar. The dollar right now is up. It's at 96.77, got repelled at the 9-period moving average of 96.91. I think it's looking quite good. The weekly chart suggests it's going just sideways. And look at the EUR-USD. This is the currency pair. Sharp move to the downside after peak D. And I think it's just a sideways range we've got in both the euro and the dollar at this particular point. No breakouts just yet. And the USD JPY, that's a different picture. That has made a peak E in the daily, high-level consolidation, but at 124.37, if it takes out the low of that candle that made the high in the 12th, 123.78, if it closes under 123.50, I would suggest to you that the weekly chart is saying stuck in a range, but I'm going to probably be testing the bar of the 17th of July with a low of 122.24. All right. So I think we've done a chunk there, and I want you to do the VIX index, and then we can either take calls. I'm yours. Let's put it that way. Yeah, look at that VIX index. Looked fabulous early in the day as it was hitting the 200-period moving average, and that would have helped the weekly. But no, I don't think this is going to be the week for the VIX. Not yet. First part, I don't think. Maybe the later part. Maybe this time Friday it really closes strong. Who knows? But in the meantime, back at the ranch, the VIX is only up 39 cents at 13.22. This morning it hit 14.52. That's $1.25 off its high. That's amazing. All right. Now, what do we do? HSIC, question of the dead. HSIC is Henry Schein. Now, Henry Schein, I used to have this. It's so disappointing to pick it up and find that for some reason the notations that I used to have are not there. They're there somewhere, but they aren't there on the chart right now. Now, this is Henry Schein. As I recall, is this Henry Schein, the dental guys? He's a South African that is the CEO. It's just a fantastic company. They've really been on a run. Look at that. Look at the chart. Look at that 9-period moving average. It walked and then ran the 9 EMA. Amazing. I think that at 145.49, up 39 cents, something is going on here by this particular pattern. You know, we've seen this often. Let me just draw it for you. If I can, I'll try my best. Space to the right. Let's go 22, just to make a nice big, wrong chart. Space to the right. Space to the right, 22. There it is. Okay. Now, what we would be doing is saying, this looks like an inverted staple or a head and shoulders. You see, here you've got the left shoulder, LS. Here you've got the head. This is a classic, what we call a head and shoulders pattern. And over here, maybe not so long in time, you get the right shoulder. So I'm expecting that there could be a pullback that takes you down like that. And then there could be a little bounce. No, I made that way too high. A little bounce that goes sideways. And if we're in a recession, these guys will feel a recession. Well, recession, did anybody say recession? Excuse me, did I hear somebody say recession? Yes. I think we've been in some kind of mini recession almost all year. That's what the charts are saying. It's maybe measured differently, but that's the way it is. I'm going to go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
So, question for you.
Question away.
Playing the IBB for a short-term bounce. Bought it last. I bought a few options that expire on Friday, and I'm doing quite well on them now. Bought them when it was in the 360 range, and it's up pretty good. I'm wondering what you think the top of this little bounce is going to be.
Okay, that's a great question. And first of all, congratulations on sticking with it. And sometimes, you know, options are great because they force you to hold the position. You don't get all this little whipsaw stuff. So we'll be back. We'll be back with Mark in Denver. Right after this, we're looking at the IBB, the NASDAQ iShares Biotech ETF.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. Dow's up 37. S&P's up 4. And we're going to go right back to Mark in Denver. So, Mark, the question was, where do I think that the IBB could bounce to if this bounce is going to continue? And the answer is, because it's taken so much time to come down, but not if you're looking at it with a left side, right side perspective. That was a pretty quick slump that was unexpected by many people. I would suggest that this is where you get buyers coming in that are considering that a chunk of the work on the downside has been done, and now they can pick up their favorites, Celgenes, Gileads, etc. So, as it looks right now, it's going to be very important. Friday was really a very disappointing day, but in fact, we've more than made that up today. The way I'm looking at it, there are 3 levels. The first level would be that you want to, at 367, you want to see 370, the 9-period exponential moving average in the daily, at least attempted. If it's hit and there's a sharp pullback, then it's suggesting to me that this is wheel spinning and you're really not going to go very much further on the upside. You may take time, but not so much price. But if it goes to 370 and all of a sudden 369 becomes support because it keeps trying to go to 372.60, which is another resistance area, then there's a chance that I'm looking at an arch formation that could take it to or close to the 375 level. You'd love to hear that, right? 375 level of the 200-period moving average in the 120-minute chart. So I'm going to draw this in. We've got one H pattern. Now this next mustn't be an M shape, lowercase m pattern. You want it to be the the pattern I call the larger arch formation. So you don't want to just see a bounce to the 372 level, although you wouldn't mind it. What you really want is a bounce that starts to hold. And if there's a 120-minute bar that is weak, it's not weak only for a short period because it closes near the high, and that'll suggest that buyers are coming in. Because of Friday's action, I've tempered my enthusiasm a little bit. That's why I didn't go back in this morning into the long position, 200% long position. But in fact, decided, you know what, I might miss it. I'm going to just have to bite my tongue and look at it. But you did exactly the right thing. You got the options. Now, the options in length, I wouldn't be hanging around too much because the question is, do you have enough to exit some if it gets to between 369.50 and 370.50?
Yeah,
and then
that's
just
kind
you
of
do.
my plan. Yeah, I've got well, they all expire Friday.
Oh, this is for Friday. Okay. Then you have a little. Then you have a little bit different scenario because you don't want to lose that premium. Every time there's a move to the upside, it'll rise, but if that move actually is held and sustained, then all of a sudden, I'm sure you're seeing it, then the price, the premium accelerates to the upside. Right now, it's probably pulling back a little bit because we've taken time to digest this big gain from the low this morning.
Right.
So if you could, I'm going to talk about premium rather than just the price. So if it runs to 370, you'll get a fabulous premium. Take something off immediately.
That's my plan.
Okay. The next level is 372. So what I would suggest, it goes to 370 and pulls back. If you can get 367.50, maybe put one or two back, and those things you can be more aggressive with because you got them a little lower down. Because if it goes to 372, then you want to be taking of something else, and then just leave some for Wednesday. I think by Wednesday, maybe Thursday morning, it's all done to the upside. That's just the way I'm looking at it. But any pullback now but to 364 says, you know what, that upside's the M-shaped pattern. It's not going to go all that far.
Okay.
So that's kind of the way I would look at it. I hope that helps you.
That does. Thank you.
Thank you very much. Hey, congratulations. Great entry point, and congratulations on sticking with it. Okay, folks, let's go to this. I want you to, you know why? I have to ask the question. Look at G. This is my Dow quartet I did during the show I did for Tom earlier on when I was subbing for him. G is holding nicely. It's down just a penny. But this is the daily chart. The weekly chart is still really ugly, and the technicals are poor. And the monthly chart on GE. Oh, that's right. I put 22. Let me change that. Space to the right. Let's go back to 7. There you go. Now you can see GE there. And the space to the right, the move underneath this channel that I drew in says that it's kind of stuck. It's not bad, but it's just kind of stuck. So if GE does go from 2606 by Tuesday afternoon, Wednesday morning into the 2630s, then all of 2640s especially, then I have to say, you know what, the rally could last a little bit longer. I don't think so, but that's what GE might be saying. IBM is out of the picture because this is just a little bit of a bounce. And yeah, it could be a little bit more of a bounce if there's time involved. But at 156, I'd say another 2.5, maybe 3 points maximum. And Triple M, I'll be back straight after this break. Triple M is acting okay, but it's not a good-looking chart. And UTX looks terrible. I'll be back straight after this break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're looking at Estee Lauder. That's the cosmetic company, down 3.80 at 85.02. Made a peak D in the daily, made a leg D, possibly a peak D in the weekly. Very poor technicals, and a leg F in the monthly. And this is going to be very interesting because this, you've had some fabulous moves up in certain stocks. This is one of them. And slowly, this is one by one, they're starting to deteriorate. Let me see how UA is doing. This is EF, this is a peak F in the daily. So let me put that in E, and there's your F, and that says it gets a down arrow right there. All right, it's trying to rally. At 100.22, it's down 3 cents. The G/C. So actually, you could have one more pop to the upside to 101.83 or higher. And that'll be leg E in the monthly, getting ready for a pullback. This is Under Armour Inc., athletic apparel. Possibly a leg D in the weekly, because the weekly technicals are still good. And then a U-shaped pattern for a little double top in the daily. Oh, this is going to be interesting to watch. I better put that down as a stock to watch. Let me write it down while I can, because I'll forget it soon enough. UA on watch at 100, and the date is 8/17/15. Put it there with a sticker. How many stickers does it take? There you are. Okay. Right. So that's UA, and we're going to look at within the context of the sectors, I just want to look at Wynn. Wynn is doing his best to get this casino. Everybody knows that who's watched my charts that I've done a lot of work with the casinos, just notating them, that is. We hardly ever have them. And there I have no letters, so just put it in. A, B, C, D, peak E in the monthly, in Wynn, trading at 92.16. Now, I happen to have met someone who's very, very, it was purely by chance, deeply involved with Wynn and part of what's going on here in the Boston area. And that person was saying that they were very impressed with the board. I was impressed to hear that she was impressed. And we'll see. I think that that's very important. I know they're having a big tussle. Yeah, all right, so let's look at the 92.19 with Wynn. And Wynn is the monthly chart really doesn't look good. The daily chart really doesn't look good. The weekly chart doesn't look good. Well, there's that H pattern that went to an M pattern that failed. This is very important, 92. If Wynn takes out 90 support, 72 is the 200-period moving average in the monthly chart. Oh my goodness. I don't know. I never expected to see this Wynn resource. I just hadn't looked at it for a little while. This is not good. This is not a good chart at all. So, okay, upside is limited at 92 right now. It's limited to the 9-period moving average of 96 and the other moving average at 98. So it's 4 points. I don't know. How's it going to get 4 points? Something has to happen with Wynn. I'm shocked. Speechless. Well, not really speechless. Okay, so now let's look at this. I'm impressed with the way Exxon, even though we lost, we were breaking even, a gain of 30, a loss of 30, a gain of 40, a loss of 40 cents, and now we just lost $1. Why? Because I put the stop in at 77.50 and the low was 77.45. 5 cents took us out today. I kind of like what I'm seeing. I mean, I'm not saying oil is going to back up to the moon. I'm just saying that Exxon has had, out of ExxonMobil, that is trading at 78.84, up 46 cents. It's 1, 2, 3, 4, 5, 6, 7, 8. In the last 8 sessions, just out of 10 sessions, the last 8 sessions, even though there were slightly lower lows made to the 76.33 level, have been very constructive, both in the daily. I could say the weekly, but what are we going to do? 2 hours into the first day of the next week. So far in the daily, 2 hours into the first week, it hasn't gone to a new low. In fact, it hasn't gone to a new high either. It's still stuck there. But the way I'm looking at it, I think there's going to be a rally to 80, between 80 and 81, and it could happen a little later in the week. I don't know if that's the case. I'm just saying the chart is suggesting, especially the 120-minute chart, not now. If it didn't make that low today, if it didn't go so low, I would have been much more comfortable. I don't like the fact that it made that low, that little extra low. If it held in the 70, above 78, I would have felt better. Doesn't matter. I'm looking at it and I'm saying that if ExxonMobil can break to 79.60, it's just 80 cents higher, then all of a sudden that 200-period moving average magnet at 80.79 will beckon. Let me look at COP, which is ConocoPhillips. Yeah, you see, this is not as good. It had 3 really good green candles. 1, 2, 3, 4, 5. Out of 5 sessions, it had 4 really good looking candles, and now it's just giving it back. So maybe I'm a little bit too optimistic here, because crude oil is very, they're not going to trade the same as crude oil. There's a whole process that goes on, but they kind of go in the general area trend. So crude oil, I think, I spoke to someone over the weekend and said, I think that crude oil is close to at least a bounce attempt, and it should make, if it doesn't take out Friday's low of 41.35, I said, but instead takes out the high of 42.96 in the next 2 days, finally you can get yourself at least a test above the 9-period moving average of 43.68 in crude oil, which has not been able to close above the 9-period moving average. Look at this. Since it broke down on the 24th of June, every single day it's had either lower lows or it has failed at the 9-period moving average, that black line there. But the stochastic still at 8.74%. That's not good. That's really not good. Let's go to Mike in Toronto. Mike, how are you?
Yeah, hi. Thanks for taking my call.
My
You're
pleasure.
talking about oil and gas stocks. Could you look at Crescent Point Energy on New York, CPG?
So is this also on the Toronto Exchange?
It's also on Toronto. Yeah.
Okay. Does it have the same chart on the Toronto? It's just a different symbol because it's on a different index, or is
It's
it a
dual
different?
listed on Toronto and New York.
Okay. So, all right. As I see it right now,
Look at the daily.
wow.
A nice little doji.
This is an example. I've spent, I don't know how many years trying to figure out. I always talk about walking the 9-period moving average.
Yeah,
I don't know what to call it when it's going down. I know in my mind I have a picture, perfect picture. It's the gondola, when you on a lift, on a ski lift. So it looks like a gondola on the way down, or one of those like in Cape Town, South Africa. There's this fantastic trolley, the cableway that takes you. So it looks like a cable car, and the cable, that's all these years. It's the cable car, and until it can go above the cable at 13.60 CPG, Crescent Point Energy Core, trading at 12.51, down 20 cents, until it can start to make that 9-period moving average a support level rather than the cable resistance. I better write that down. I already forgot it. Cable car. All right. Wow. If you had to ask me right this very second, just as I did earlier when I did Tom's show, and I had a call about, also it was FCX, which is kind of not in the same area, but it's the same kind of chart pattern, the Freeport McMoran. And what I had said is, a nibble right here, that was a slightly different chart. Let me even look at it now, FCX. Yeah, that's a slightly different chart, but it's the same characteristic. So I'm getting, let me do this. You have no position. You've been waiting patiently. You haven't done anything yet. Is that the way it is?
Till about, I started listening to your show at 10 o'clock.
Okay, so now you're looking
yeah.
at it, but you still don't have a position, right?
Yeah. I mean, I'm seriously looking at getting into this thing today.
So here's my suggestion.
For a technical bounce.
Yeah, so at 12:51, I see, because of the way it's crescendoed away from the 9-period moving average, and in the weekly and the daily, with a stochastic at 2.94% in the weekly, this is really tough because I would only treat it as a trade. But I think just on the short term, and of course tomorrow I could regret it because it could open down and gap down even further. But I think at 12:51, I have a lot more confidence in saying to you, I think you'll be able to get out at 12:51, even if it pulls back to 12:30.
Yeah.
Because the characteristic of the doji candle just 4 days ago, and the way it's like a halfway marker, I would suggest to you that if you were to take any position at all, do you ever do options?
I'm not trading options on this. It's too late to short this stock. Okay,
It's way
all
too
the bad news is in. They cut the dividend. They had a $2.5 billion equity offering. Okay, the CEO was on the Canadian cable news channel last week, just crying out. He was just crying and everything. So all the bad news was in last week. You see what I mean? Everything
Right.
you can imagine has been discounted. Okay, I mean the chief executive officer was literally crying on TV. Dividend cut, $2.5 billion equity offering. Okay, all the bad news factored in. So that's the way I'm looking for a technical bounce back to the 9 EMA.
Yeah, I know. I understand what you're saying, but I would have preferred, as we're talking, instead of being down 22 cents, if it was closer to the high of the day. It's getting there.
Yeah.
Or there was a spike down today, Monday,
Look at
and it was
today's
holding.
action. Look at today's action. An exhaustion dump at the open.
Okay, now I'm looking at it a little differently. I just decided that I would look at the volume. So the volume today at this point is 221,000. Friday's total was 1.05 million. So you can't 5 times 2. You can't make that. Oh, I know. I think this is the way I would do it. I would take whatever you were going to buy. I would just start off with a very small position right now at 12.49.
Yeah.
If you go, would you put a stop in, or would you just say, you know what, I'm just going to buy it because I think it's going to move, and I don't want to be taken out, and then it bounces? Or what is your feeling about that?
My stop is today's low.
Well, I'm sorry, what?
My stop is today's low.
Okay, that's fine. Or today's low, or 1 penny below. But anywhere there, that's fine. If that's the case, I would nibble on it now. I got a feeling that stop might be hit if it doesn't rally today. It needs to close at the high of the day. So if you're going to nibble at it, I would have, in my mind, I would have 3 small positions, 2 of which I would take up this week. One I would probably wait another little bit, because if it works, you'll have time to add another trading position, because then it's going to work its way towards the 1599 period moving average if it can break 1360. So those are the levels. So here we go.
Wow.
A little nibble right now at 1248. Treat it as a trade. I know in your voice, I know that's what you're thinking, right?
Mm-hmm.
Okay. Now here's what I want to see. The 120-minute chart has 1293 as the 9-period moving average resistance. If between this afternoon and tomorrow during my show, or maybe between 1 and 2 o'clock, it is not traded up to 1275, trying to get to the 1293 area, I wouldn't do anything. I would not add. I want to add on strength and not weakness once I've started a little bit of a position. If it does move to 1270s, I would add another small position, but then you're going to have to wait. It must not take out the low of today. That's number one. Number 2 is you want rising highs and rising lows. This is the V-shaped pattern you want to see right away. I'm not sure you're going to get it, but if it does that, what will happen is that many people who got out might say, oh, it was too soon, and they might say, if it goes to a certain level, I'll have to try to get back in. But they won't get in on the next 2 days. So this is fresh buyers or people who are looking at it just like you, saying, hey, this is enough. This is ready to move. And that's what you want. You want a stock that says, look, I've made a serious down move. I don't know if I can make a serious up move, but I can at least attempt for the very first time in weeks some kind of rally. And I think you've pinpointed the time exactly right now. And if it's going to do it, it needs to do it fairly soon. And then call me later in the week. Let's see where it is. And if it's acting well, I'll say, now you can add a small third position, and there'll be much tighter controls on that. But if you can get in now at 1251 and have a cushion of 50 to 60 cents within 2 days or 3 days, that's going to be nice. That'll say, hey, good timing, good eye.
Do you think you could get to the 20, to the 20-day moving average?
I just, to answer you on a intermediate term, until I wouldn't even talk 20, I'd be talking 14s to 15s. And I wouldn't even talk that until there's actually a turn to the up. It hasn't even had a decent leg A to the upside, so it needs that. Go one step at a time. When you start looking too far out, you can get confusing pictures. Hope that helps you, Mike.
Thank you very much.
Thank you for calling, and good night. I'll be back. Basil Chapman, Tiger Tendencies.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Partners. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. So what we're looking at, Jerry, is in the E-minis, you've got left side, right side, and a 10-minute chart. I showed you this circle before. We broke above it. Now you've gotten to the next area of resistance in the 2093 area in the E-mini, and you've got 2090 as key support right now in the short term. The MACD 10 minutes still good. Stochastic at 91% is still good. So I'm not sure quite why it's pulling back like this, but there should be some kind of a sudden pop to the upside for leg C, and leg C would start at 2094. Now, look at this as the left side, right side price time match. I chose that particular bar for it, and the Chapman wave inside wedge took you to there. It's got another bar. I don't know how you can go from 2090 to 2095 in the next 15 minutes or so, but that's what it says that it should do. However, there is strong support at 2019. That's what we're going to be looking at there again. So just to show you how I like to do it, if I'm trading, if I'm looking at, I use different parameters. Love that arch or the V-shaped pattern for a left side, right side, price time move. So in the meantime, right now, before we go, before I close out, and I will be doing Tom's show at 4 o'clock this afternoon, the Tom O'Brien show. And so I'm looking forward to seeing you. Get ready with your calls, 877-927-6648. Let's just do this right now. The VIX index, very important. If the VIX index at 1329 remains low, underneath 1350, there's still support for the Dow. If it goes below into the 12s, that's going to say that there should be another phase to the upside in the Dow 17,550 to 17,570 should be approached. Maybe in the S&P you'll finally get to 2100 and close there. That'll be a big positive. So that's the VIX index, and that's the dynamics I'm looking at. I had a quick question about Goldman Sachs. Julie, I hope this is for you. I hope I got to all the emails that I had. I couldn't respond to immediately, but I think I got to them over the weekend. If not, just send me your email. It just might have been lost in translation, or yeah, I got a lot of emails. So that's it. Goldman Sachs Weekly has made a peak D. The monthly chart excuse me, is holding the 9-period moving average of 197 support. It held it last week on that pullback. Most importantly, there it is in the daily, the 200-period moving average of 196. So it says to me that there should be a retest of that at some point soon. And the candle, the Roman candle that was made last week, says if Goldman Sachs starts to trade under 199, be careful. It'll really quickly test the 196.58 low of 5 days ago. Meantime, back at the ranch, it's trying to fight the 9-period moving average. It's trying to get to the 203.50s, which would say, okay, finally I can treat that 9-period moving average as support. The technicals are trying to improve. I just think this is a bounce within the context, same as the XLF, and that's really important. The XLF is holding well, hasn't broken down, but it's suggesting that any weakness that takes it under 25 will be the kind of weakness that pushes it into the 24th. So I'm watching all this really closely. And don't forget, my service is the opening call. Go to the front page of TFNN. You can check it out. 2 weeks for free. And I think that this is a great time to be looking at someone's service where you've got real challenges and how those challenges are being met and the success rate. So that's that. I wanted to quickly do Home Depot before we wrap up. ABC, I'm going to suggest that this is F/C in the daily, and that kind of goes with those housing stocks that we were looking at. See, that weekly is broken out very nicely. There are certain sectors that might be holding up a lot better this week than others, and that's going to be very important. So I wanted to go through just a couple of things. I can't remember now if I looked at the HGX with weekly chart in this section or whether I did it in Tom's. I'll do it right now. Look, the HGX, then you move A, B, C. I'm calling this leg C. Let me just double check. I don't want to do anything hastily. C. Oh, it's still strong. Let's put it that way. I'm sorry. Perhaps in Tom's show I'll have had a chance to finish the notation. So, folks, thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,